Hi, Assalamualaikum. We are students from Uitm, Universiti Teknologi MARA. We are a Bachelor in Human Resource, batch 20252. This group project was carried out as part of the subject ACC407 Financial Accounting and Reporting. For this project, we selected a local business named Nasi Manggey Selere Kapong, a sole proprietorship that offers traditional kampung style food. Our main objective was to explore and understand the accounting practices of a small business and how it managed its financial records and daily operations. Throughout the project, we worked together as a team to collect relevant data, analyze information, and present our findings in a structured and professional manner. Every group member contributed with full dedication and cooperation, showing great teamwork, responsibility, and positive attitude. We believe this project has not only enhanced our understanding of financial accounting in the real world, but also strengthened our skills in communication, collaboration, and problem solving as a team. Okay, next, this project was successfully completed by committed and hardworking team of 4 members from your ITM Bachelor in Human Resource batch 20252. Each member played an important role and contributed greatly throughout the project. Here are the group members, me, Nur Natasha Alia binti Ma'fuad, and then Nur Aisyah binti Saharuddin, Nur Natasha Alia binti Hizal, and also Nurul Fatin Amira binti Muhammad Taufik. We take pride in our teamwork, discipline, and strong commitment in ensuring the success of this project. Together, we have learned, shared, and grown throughout the process. Okay, next we go to the background of the business. For ACC407 project, we selected a small local business named Nasi Manggey Selere Kapong. Type of business was sole proprietorship, location Masjid Jalan Hiliran Cabang 3, 21,000 Kuala Terengganu. Business activity was traditional food business that serve village-style rice dishes mainly during lunchtime. Nasi Manggey Selere Kapong is well known for its affordable, delicious meals that reflect the taste of traditional kampong-style cooking. The business operates on a small scale but has built a strong customer base due to its consistent quality and friendly service. The signature dish was white rice, eggplant curry, chopped fried chicken, sambal belacan, cucumber salad. The owner managed all aspects of the business, from food preparation to financial recording, using a simple but practical approach suited to a small enterprise. Okay, then we go to the side dish. In addition to the signature dish, Nasi Manggey Selere Kapong also offers a variety of traditional side dish that complement the meal and enhance the overall dining experience. Some of the popular side dish include fried catfish and kerisi, ikan belado, soy chili sambals, and also salted eggs.
Okay, next we are moving on to the business characteristic. Okay, first thing first is nature of business. The business operates as a sole proprietorship, which means it has a simple structure, direct control by the owner, and full personal liability. All decisions are made solely by the owner. This structure provides the owner with complete control over all aspects of the business, including operation, pricing, purchasing, and customer relations. While this allows for quick decision making and flexibility, it means the owner assumes full personal liability for any debts, obligations, or legal issues the business may occur. Next is a number of owner and rules. As a sole proprietorship, there is only one owner who is solely responsible for managing the business. There are no partners or shareholder involved. The owner perform or oversee all the key functions, including food preparation and quality control, procurement of ingredients and supplies, financial management, customer service and marketing, and lastly, daily operation and staffing decision. The centralized rule emphasizes autonomy but may also lead to high workload and decision fatigue. Next is profit or loss allocation. All profit and losses are fully borne by the owner. There is no sharing with any third party. That means all profit earned by the business go directly to the owner. Likewise, any losses, liabilities or debts must be absorbed and settled by the owner personally. There is no income sharing or risk distribution with other parties, as will be the case in a partnership or cooperation. This arrangement reinforces the owner's full accountability and financial exposure. Last but not least, risk and uncertainty. The business faces a number of potential risks and uncertainties, primarily related to market competition and consumer behavior. Specifically, there is uncertainty in predicting daily customer demand, which can fluctuate due to external factors like weather, holidays, or economic conditions. Next, competition from the other local dishes such as nasi dagang, nasi kerabu poses a challenge. These alternatives are often similarity, prices, and culturally familiar to the same customer base, which can affect customer retention and sales volume. Additionally, any changes in the cost or raw material, example, rice, chicken, spices, can impact profitability, especially with fixed menu pricing. Okay, that's all.
Next, we move to the classification of the business items. First, for assets. Assets are items or resources owned by the business that have value and are used in daily operation to generate income. For our business, the current asset include first, industrial gas stove, considered a fit asset for large-scale cooking because it is used for use over a long period and not easily movable. Second, large pots and cooking equipment. These are essential for daily operation and also categorized as fixed asset. Next, for sales tables. Sales table used at the sales site for displaying or serving food at store. Next, refrigerator used to store ingredient or raw material for for the business. Next, large canopy chairs and dining table. It also used for customer sitting and provide comfort place for dining. These assets are not consumed or used up in a single business cycle. They provide long-term benefits to the business. Next, we move to the liabilities. For liabilities, we have raw materials such as chicken are purchased on credit from the supplier, and weekly repayments are made based on purchase price. No external loan, such as bank loan or other debts. Most business purchases are made in cash. Monthly fixed expenses, such as employee salaries and utility bills. Next, for the capital. Capital refer to the owner investment in the business. The owner invested RM2,000 ringgit as starting capital. This amount is funded initial to set up and purchases of fixed asset and initial inventory. Represent the owner equity in the business. It also reflects the owner stake and commitment to the business. Next, we move to revenue. Revenue is the income that the business earns from its sales or services. From the During our interview with the business owner, the average net profit of business RM 90,000 until 11,000 per month. The gross revenue is higher than RM 11,000 as it includes income before deducting expenses. Revenue varies based on season and customer flow, but still the business maintain a consistent income. The business also has a healthy profit margin, which indicates good control over expenses and strong customer demand. Lastly, for expenses, the total cumulative expenses are approximately RM 300,000 ringgit, including for raw material purchases, for employee wages, for utilities such as electricity bills, water bills, gas, and other than that. Lastly, for equipment and operational costs. Operational costs.
Okay, next we are moving on to the recording process. First type of record keeping. Okay, first type of record keeping. Manually daily accounting book is used for recording both income and expenses. That means the business employs a manual record keeping system utilizing a daily accounting book to maintain clear and organized financial record. This approach provides a simple, low-cost solution suitable for small-scale sole proprietorships like Nasi Manggey, while ensuring that both income and expenses are consistently tracked and accessible for review. Okay, next, sales recording method. Sales transactions are first documented in a dedicated sales record books. This log is maintained throughout the business day and include the following information such as date and time of sales, descriptions of time sold, for example, nasi manggey, drinks or side dishes, quantity sold, unit price, total sales amount, and payment method. For example, cash, e-wallet, or QR pay. This initial records helps the owner monitor real-time sales activity and support quick tracking of which product are most popular on a given day. So next, At the end of each day or during slower period, the data from the sales record books is transferred into a more detailed financial logs. This log categorizes income and expenses and is structured to provide, for example, daily sales totals, breakdown by product or service type, comparison to previous days or weeks, expense tracking, including purchases of raw ingredients, packaging materials, and operational costs. This process allow the owner to detect pattern, evaluate performance trends, and maintain an accurate overview of the business financial position. Last but not least, all receipts and supporting documents related to business expenditure are collected and stored in an organized manner. These include ingredient purchases, for example, rice, chicken, spices, and utility bills, for example, gas, water, electricity, equipment or packaging materials, transportations or delivery costs, and any miscellaneous operation expenses. All receipts are typically kept in a label, folder, or envelope and grouped by category or by month. This system is crucial for verifying entries in the accounting books, preparing financial reports, and supporting future tax filings or loan applications.
Okay, next, I will be explaining the strengths and weaknesses of the recording process that we have discussed earlier. Let me begin with the strengths. Firstly, the system allows for manual control over finance. This means that the owner has direct control and full oversight of all the business transactions. It helps the owner stay aware of every single inflow and outflow of money. Secondly, the process is simple and straightforward. The daily record keeping method is easy to follow, which reduces confusion and makes it easier for the owner to maintain accurate records. Thirdly, the system offers flexibility in updating records. Since it is managed manually, the owner can choose to update the records during their free time, allowing business operations to continue without any interruption. Lastly, there is an organized storage of receipts. By keeping all purchase and expenses receipts, the owner can ensure better accuracy and have proper documentation for reference when needed. Now, let's move on to the weaknesses. Firstly, because this is a manual system, it is more prone to human error. Mistakes or omissions can happen easily, especially as the business starts to grow and handle more transactions. Secondly, there is a risk of data loss. Physical records such as papers or books can be damaged, lost, or misplaced. This can affect the reliability and continuity of business operations. Thirdly, the system has limited scalability. As the business expands, managing a larger volume of data manually can become inefficient and time-consuming. Lastly, there can be delays in real-time updates. Since the records are updated after business operations, the owner might not get an accurate picture of the current financial performance immediately. In conclusion, while the manual recording system has some useful strengths such as control, simplicity, and flexibility, it also has its limitations, especially in terms of efficiency, accuracy, and scalability as the business grows. So, the conclusion that we can make is this business, established as a sole proprietorship in 2020, has shown impressive growth through careful planning and efficient operations. Starting with an initial capital of 20,000 ringgit Malaysia, it now earns a consistent monthly net profit between 9,000 and 11,000 ringgit Malaysia, depending on customer flow and season. The business also owns several important assets like cooking equipment, canopies, and dining setups that support its daily operations. Financial transactions are recorded manually in logbooks with daily updates and proper storage of receipts for reference. While this manual system is still effective for now, it may become less efficient as the business continues to grow. This brings us to the importance of good financial recording. Accurate and organized records are crucial, not only to monitor cash flow and profit, but also to make better decisions, prepare for taxes or audits, and support future business expansion. With proper financial management, a business has a stronger foundation for long-term success.
Okay, next we go to the appendix. We also had the opportunity to conduct a brief interview session with the business owner, Puan Ika, to gain first-hand information about the background, challenges, and management of the business. Okay, this help us better understand the practical aspects of running a sole proprietorship. As shown in the appendix, we have included several photos and interview with Puan Ika. These pictures serve as supporting evidence for our findings and document the real life experience we had while completing this project. Thank you from us and Assalamualaikum.
Thank you.